This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we are seeing the beginning of March Madness, and that typically leads to a lower volatility trade, but not today. The trade in madness is in the ag sector, grains and livestock, but let's look in at that grain market. Right now we've got corn trading up quite a bit here, pressing up against some key technical resistance levels that are going to be very pivotal going forward. Wouldn't be surprised to see the market stall out a little bit against 380 to 385 for that May contract. This represents the 50, the 100 and 200 day moving average, key Fibonacci retracement, and the original breakdown point from last month. Now, with that said, we know that weather is a big kind of a growing concern, I guess you could say, throughout the Midwest, not just for possibly delayed planting, but transporting grains and whatnot as well. So you're seeing funds start to cover their short position. They have a rather large net short position. So if we can achieve consecutive closes out above technical resistance, I wouldn't be surprised to see the funds rush to the exit a little bit more and continue to press this market higher going into the end of the month and into the quarter when we have that USDA report there next week. Now, moving over to the soybeans. Soybeans were kind of more or less a stick in the mud. Not really bearish, not really bullish, more or less neutral. We defended $9, psychologically significant, very well here this week. But the bulls might have a hard time getting out above 912 to 918, which is a 50, 100, and 200 day moving average, as well as trendline resistance. That is if we don't get any positive headlines from trade with China. If we do get a positive headline, potentially we see the market break out above those resistance points and move higher with corn. Now, wrapping things up with the wheat market. Wheat kind of lagging today, but still relatively constructive over the past couple of sessions. We defended 450. Now our target to the upside, 475 for that May Chicago contract. This was previous support, now becomes resistance. From there, I think the market probably stalls out, takes a little breather. But again, if corn and soybeans can work higher, I think that'll drag wheat out of the basement with it and start to get some positive price action going into the new quarter. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.